Today, we are going to explore a fantastic tax saving strategy known as the primary home exclusion. This strategy can be a game changer when you are selling your property. So let's explore it. But how does it work? Well, it's all about living in the property as your primary resident. By doing so, you unlock the door to the primary home exclusion. And what does that mean for you? It means you can potentially exclude up to a general $250,000 of capital gains from your taxable income. So if you are married filing jointly, that number double up to a whopping $500,000. To qualify for the primary home exclusion, you need to meet what are called the ownership and yield tests. These are the crucial factors that determine if you can take advantage of the tax saving opportunity. Here are what they involve. First, you must own the property. That's the ownership part. Second, you need to use the property as your primary residence for at least 2 out of the last 5 years before you decide to sell it. That's the use part. These are two tests, ownership and use tests, and they are the key to the tax saving door when it comes to your home. Now, what if you have used the property as a rental and you are thinking about moving back in to benefit from the primary home exclusion? Well, you are in luck, but there are some things to consider. Just like before, you need to meet both the ownership and the use test again. So it's not just about moving in. You need to own it too. You will need to live in the property as your primary resident for at least 2 years before you sell it. That's the golden rule to unlock the tax benefits. So in this situation, you are not just getting the keys to your own place back. You are about getting the key to potential tax savings. But what if you can't meet that 2 years use requirement? So life can throw surprises at us, like a job change, health issues, or other unexpected events. In such cases, you might still get a piece of the tax saving pie. If you have a valid reason for not meeting the 2 year use requirement, you could qualify for a partial exclusion. It's like getting a partial ticket to a tax saving show. That means you can exclude a portion of the capital gains from the sale, even if you can't meet the full 2 year requirement. So, even if life throws you a curveball, there's still a chance to save taxes on selling your home. Lastly, don't forget to keep records. Keeping good record is the key to tax saving. Make sure you maintain comprehensive records of your time residing in the property. These records serve as evidence for your eligibility of the primary home exclusion, and they can make the whole process go smoother. We will go into detail how to report these on the tax return in the later section. If you are curious, you can jump right into that section. With that, let's move on to the next strategy.